Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How we doing out there? Hope everybody's good. Welcome to the Closing Beat stock market update show that we do every day to go over the stock market, help you keep your dough straight as far as the stock market's concerned. We are financial advisors here at Jazz Wealth, and we focus on everything. We work with the investments, of course, your long-term retirement investments, short-term investments, anything we can do to help you grow your dough. We've got a lot of cool things coming up. I'm super excited about all of that. And hey, quick shout out. It's cold down here in Florida. Quick shout out to one of our customers, Clifton, who sent these really cool insulated, camo Crocs, if you can see them, huh? So I've been wearing them all day, nice and cozy, just walking around looking like a little bit of a weirdo with the clothes on. But hey, thanks, Clifton. They're come in handy, nice and warm here. Hey, there's going to be no show on Friday. You want to know why? You want to know why? Because we're actually working on our new client portal, testing out some things here. So check it out. We've got this client portal in the works for our customers here. You'll actually be able to go in and see your account. We've been working so hard on this, man. I'm so excited. Here is a live one, actually working, a sample account that we've got pulled up, actually functioning, everything going well. You can see your deposits. We'll be able to interact with each other through different posts and stuff, see your performance, see all your different transactions, the classes and stuff that we do. You can even go in and view your holdings, see what's going on inside of all your accounts and see what changes we're making and things like that. I'm super excited about it. It's been a work in progress, man. It's been a real work in progress, but we got it done. So we're going to be testing that out and getting all the final touches put to it so we can get some beta testers for you and everything. It'll be 100% custom. We'll be the only advisor to not only show you everything that we're doing, but when things need to be done, you'll get to see it before as well. So you get to see when we're about to make changes and all that good stuff. Hey, that's enough of the promo stuff. Let's go over to the stock market today. Felt like a quiet day. Did you feel like nothing happened? It was kind of a blah kind of a day there overall. But one thing I want to point out is we came off the lows. Let's go over to the charts, take a look here. So here's the S&P 500. We were down last night, actually pretty good. Markets recovered overnight and went positive here just at the squeak there to get the end of the day. It just sort of floated around actually about 3 to 4 o'clock. Throughout the day. S&P remains sitting here in one of those, you'd say, neutral to bullish positions. We know that the beginning part of December from the show yesterday tends to be a little bit wobbly before we get that final Santa Claus rally going into the end of the year. I'll start with the Russell. We'll take a look here. One of the stronger ones today thanks to value stocks. So small cap value was your big winner today. Overall, small cap value has just been doing really well there. If you've been following along, very strong. It was one of them were beaten down areas for the year. Actually, all value stocks were beaten down early in the year, but they've been getting that late year resurgence as we go into the end of the year. Large and mid caps also led the way today. If you're looking at that, as far as this quarter, small cap value beats the index by 4 percentage points there. So kind of interesting. And remember, they were beaten down. So this was like financials. This was like energy. Nobody wanted anything to do with it most of the year. Now all of a sudden that's changed, so a lot of rotation that continues over there. Let's go over to the Dow and take a look here today. 7% gainer year to date. Boeing was your biggest contributor today. As far as the gains today, up to about 225 again, getting there, looking a little bit better. It's up 25% just this quarter, all thanks to that 737 MAX momentum, getting them back up in the air, hopefully seeing some demand for those planes as well. Salesforce was your biggest drag today, down 8% on the day, based on the Slack deal. Investors basically thought, hey, it seems like a little bit of extra money that you paid for Slack to try to compete with Microsoft. I like it. I think it's a good acquisition there for them, and I could see many ways where they'll integrate that into their platform already if you happen to be a Salesforce user. If we go over to the Nasdaq, we'll take a look. The Nasdaq's hinting at new highs yet again. That would put it almost 50% up on the year. It's got a little bit more to go there. That's actually kind of rare. Let's go over here and take a look. I'm going to go to the research site. This is one of our tools here that we're playing with, releasing to customers. If we put in the Nasdaq, we're not going to have a lot of data to go, but let's just say anything over 30% in a given year. How often does that happen? Is that rare? Or is that, let's do 20 years. Is that rare, or is that something that happens quite a bit? So we'll run a little test here real quick, see what's going on, and you can actually see to be up over 30% is kind of rare. There's only a couple times that's happened. Actually, super rare for any other index, but we're looking at near 50% gains. When 2003, you got a 49%, almost a 50% gain, but that was coming off of a 37% loss. So it's not like people were too excited about that. It was a little bit of a recovery year in 2003. The year after that, we still gained 10%. That's awesome to see that. Notice over here, 2009, same thing. 53% gain after the financial crisis collapse, but in 2010 the momentum continued. Actually, in most cases where the Nasdaq has a really strong 30+% gain in a year, the next year tends to be positive as well. So it's a quick way to see the data. We are going to be releasing this to customers as well. We don't sleep. We just do stuff all the time to try to help you guys learn more about your dough. So that's the Nasdaq. We'll talk about some videos here this week, our FinTips videos, how much you need to have in a gap account if you're planning on an early retirement. Today we did tax loss harvesting. If we showed an account, it had $800,000 in it, how we could do some tax loss harvesting for someone of that size. And Friday we're going to talk about paying off your mortgage or not by using some of the data there that has come out in terms of how much your house gains in value there. We'll cover all the different regions of the country as well. If you're a member of our research site, hey, it's $13 a month if you want to join. Cody just actually put up a post here a few minutes ago, rather interesting, to show performance of the markets following 10% gains in a month. You know that those 10% gains are kind of rare. We covered that here on the show. Well, he did a deep dive on it to actually go forward, and a little bit of a history lesson in there as well, to show what to expect going forward in terms of having these months that gain 10% or more. So we researched all of them, shared that for you on the research site if you want to see what to expect going forward. And pretty cool. Our Wine and Wealth class tomorrow, by the way, we're going to do rebalancing versus taking profits. There's a big difference there that a lot of people get mistaken. So we're going to talk about how rebalancing works, but also what's the difference between just taking profits on a stock or rebalancing, and why would you do one or the other, so you can kind of see how we handle things here, but also for my active traders out there, you'll have something to take a look at as well. Let's go to the sector breakdown, and we'll use our sector tool that is available, or almost available. It's another thing we're working on here at Jazz. I like to use it because it's a quick way for me to see what's going on with the markets. We laid this out in a way that I like to use it so that you can see how we find the data that we find to make the decisions that we make there. If you look at today here, we're sorted by performance by the day. Energy by far the best performer on the day and all day. Hands down the biggest one there. We're going to talk about some energy stocks in our watch list segment here in just a minute. But you can see energy doing well there. We go over to consumer staples here down towards the bottom. And actually one thing I want to point out, it's kind of a mixed day, some positive, some negative there, not too bad. We go over to consumer staples. We're down here at the bottom, and what I'm going to do real quick is just go over to the sector in general. We'll take a look and see that it's been sort of mixed. If you're looking at a daily chart, kind of mixed overall there. Broad weakness today. See how almost every stock in the sector was down. You could look at a watch list. You could look at our scatter plot here to see some standouts from Walgreens, some standouts from Philip Morris. They had some guidance going forward about earnings, and Coca-Cola just eked out a gain for the day. Not bad. If we look through the quarter here, I'm going to go through the quarter for consumer staples. Let's go over here, look at the quarter. So for consumer staples, looking through the quarter, still up about 6%, so not too bad there. I'm sorry, 4% for the quarter, 6% year to date. So looking pretty good there. We go over to basic materials. I found basic materials kind of interesting here. It's been going positive, negative on the week. So if you want to look over here, just go 5 days. See this back and forth? Right, we're just kind of hovering back and forth between positive and negative overall. Choppy, also choppy on our scatter plot here if we're looking to see the different stocks today. Sort of directionless in the short term, but Lincare, which is the largest weighted symbol, which we can see very clearly here, is kind of weakening. I'm going to go over to a little bit of a chart here to show you the daily chart, sort of weakening in the short term after their big earnings gap there. So that may be weighing on the sector. Well, we know it's weighing on the sector just a little bit overall. Go to financials here real quick, second best quarter to date. So if you're looking through the quarter, well, let's do it like this. You want to look quarter to date, second best performing sectors, financials. You know it's not the best performer on the year. It's the second worst performer on the year, but very quickly recovering. All the action lately continues to be in energy, which we'll talk about in a minute, and financials over here. Look at those gains just in the last month or so. Really, really quick gains on that one. Today we had a broad rally overall, but the focus was on the big banks. So real easy. You could see this here. We got a broad rally in the financials, almost hitting new highs. Almost all of them were positive today. Some weakness over here in S&P Global. It has been weak this week overall. Big banks continue to be the focus. You can see them as your biggest gainers overall. So you've got Wells Fargo, you got Schwab, Citibank, JP Morgan, all of those are big gainers here today. And most of them were gap downs that reversed their losses on the day. Very interesting. I saw a little bit of that yesterday, right? Except it was a gap up. Today we had a little bit of a gap down, recovered there, and mostly all recovered their gap downs on the day. And you notice that the big banks over here now are the big circles. All of those perform together as such. So a real fast way to see that. And there's so much more. I know this looks simple, but there's so much more we could go into with this. Probably have to have a separate video just on this to show some of the geeky things we can go through. Tech today, sort of flat. See how everything was hovered around the zero line today? So no matter whether you're looking at the bigger weighted stocks like your Apple and your Microsoft, everything else was kind of flat in the mix. Not a very exciting day there. If you're looking quarter to date, all the gains are going to be in semiconductors. So if we look at sort by quarter to date, and we go by returns here, we're going to see Micron in the mix, Lam Research, Applied Materials, Xilinx, all of these near the top of the list. Micron and Xilinx are the best performers, by the way, with getting the most amount of attention. So something to take a look at there. Hey, I also want to talk about gold. Can I pop over to gold real quick? We talked about this a week and a half ago. Breaking through the downtrend there and, of course, recovering. I gave an example of me talking to an actual customer that wanted to buy. They wanted to participate. I said, wait for it to break and then buy the break instead of getting scared of the break. So some advice that is playing out very nicely. However, if you're looking at precious metals or industrial metals, copper, and kind of putting all those into the mix, then what you're going to find is that all the action has come in steel. So all the excitement over here in steel, it's the best industrial or precious metal that's out there. So don't just go all excited and say, well, it's got to be gold or silver. There's a lot of action happening over there in those precious metals. Industrial metals. Let us go to our watch list here for the day and give you some of the goods here. Now remember, this is a watch list. So we're just talking about watch list. We are not talking about stocks that you would buy like today or anything like that. We're trying to build a watch list. Every day I do this segment to just give you an idea of where to look, things you may be interested in, see how they fit with what you're doing versus just diving in. All right, so we know that the energy sector, we could use the XLE, energy sector was by far the best performer and best sector for the month. In fact, you can just go over here. You could take in energy. You could say quarter to date, what's the best performer? It's energy, 27.3%. Over the last month, energy still the best performer, 32%. So, not really anything new if you've been following the show. If we go out 3 months, that's also had the best recovery. I'm going to get out of the way here so you can see it. See the green line here? Right here. That's had the best recovery of all sectors over the last 3 months. There's a lot of action going on in energy. And so for our watch list today, what we want to look for is energy stocks in the S&P 500, which there's 25 of them, by the way, so you could very quickly go through a little list of these. We're going to use 7 of them today, but we're going to look through the S&P 500 energy names, and we're going to find those with the best support if they should pull back. Today they didn't pull back, but if they do, where would you find the best support? I'd actually start with the ETF and see that support right above the 200-day moving average. A great reversal today. May chop around just a little bit, but you've got the idea that there's opportunity there on a pullback, not reason to be scared. So we'll start first. This is also the company that's losing the most this year. But we go over to Baker Hughes. It's one of the bigger movers, and it's up back to these over these prior highs here. Using that now as support, you can see today technical traders have done that. It also has the most room to run to the prior highs. So if you look back over here, there's a risk to reward argument to make for Baker Hughes. In fact, there's going to be a lot of risk to reward arguments to make for these symbols that I show you today. Halliburton's another great example. So we poked above this prior high. Technical traders will use this area as support, and today was a little bit of proof of that. We pulled back very shallowly, right? That's a word. On top of that support there, and people already started to want to buy that. They're interested in buying these types of names because the risk to reward is there. Your risk is maybe $1.50. Your reward is in the midterm, maybe all the way back to these highs. It's not going to go there right away, but you get what I'm saying. You have the potential for multiple of a return that's a multiple of your risk, and that's what all investors like to look for, right? You guys looking for that, right? You know, just buy something that you risk $1 to make $1, right? Lesson of the day. All right, Marathon Petroleum is another one here on the mix. I thought that this pullback, if it should pull back, would look good around the 20-period moving average. You've also got some price support in here that you can use if you're interested. One Oak is the same thing. It broke out over this little range. It's above the 200-day moving average. Any pullback in here, if you even get it, you've got a recipe for a good risk to reward move up to the 47, 48 area. This has been a bit of a mover lately. It doesn't look like it because the chart's a little crunched, but this has been a bit of a good mover as well in the energy space. All right, Williams & Company here. You've got this prior high. This is one you might look at as a breakout play rather than waiting for the pullback. Yes, today was a bit of a rally. It did reverse all of the last 2 days' losses, but we've got overhead resistance right in here. A little bit tighter risk to reward because if you buy the breakout, you're only looking at 24 or so, but it's a cheaper stock, so your percentage return could be a little bit better. I'm thinking of all these different classes and videos and stuff we could do maybe in the research site for things like this to expand, because there's a lot more that we could do here. Anyways, looking at National Oil Well, NOV is the ticker symbol. You've got a pullback almost to the 200-day moving average perfectly. Maybe some people interested in that 20-period moving average catching up. That's always a good thing. And prior price support to use inside of this here. PXD is going to be our last one, Pioneer Natural Resources. This is about a 50% pullback. You Fibonacci traders out there, I see you. You got your 50% pullback almost in the mix, almost showing up here, which would somewhat coincide with the 200-day moving average, and that is the list of 7 stocks in the energy space that may give you reason to take a look. Again, as SEC-registered financial advisors, we are not allowed to give you specific recommendations. We could give it to customers, but publicly we get in a lot of trouble for that. And so, with that, I'll move on to stocks in the news for the day. Let's see what we can find. And then we'll let the stream catch up, take your questions as well if you have any questions. Okay, here we go. We are jamming today. All right, Norwegian Cruise Lines actually finished the day up 2% despite them saying they're going to cancel their cruise ships and keep them, docked out there in international waters till February. Some cruises even till March. So a lot of cruise companies coming out with their updates on how they're going to handle things. Interestingly, I got a book from a cruise company. I don't remember the name of it. It was like a smaller one. Boats looked pretty cool. And they were like cruises that would go to like Venice and then Rome and stuff. And it was like $900 for the fancy room and everything. Yeah, for adults only though. And so the drinks and you hang out, socialize and all that. I was kind of thinking, take the show on the road, right? We might have to do. I'll see if Wi-Fi was included. I would go on a cruise. Why not? There's no virus overseas, right? It's just here. Okay, moving on. Jetblue. So Jetblue almost recovered all of its losses today. Big down day for it, though. If you look at Jetblue, they priced their they were raising more capital by doing that by selling shares. They priced their shares at $14.40. Why you saw the gap down today? That was about 7% lower than yesterday's close. So it's kind of a miss on their part. But they sold 36.5 million shares to raise a little bit more money, and sounds like they need it. Box, which is Dropbox's competitor, 8.79% lower on the day. Take a look, they beat on earnings by 14 cents. Guidance was basically the focus, a little bit mixed going forward, not a lot of great things to say. Stock was hit just a little bit. We talked about Salesforce.com already, down 8.5% on the day. They missed earnings by 99 cents. Wait a minute. They beat earnings. Yeah, revenues came in better than expected. Everybody was focused on the Slack deal, trying to basically play armchair quarterback and say, hey, did you like that? Armchair quarterback? Did you hear it? It's a sports reference right there. Got my man card for the day. What's up? The dance took it away. Okay, so lastly, we'll move on to Merck. This is kind of interesting. So Merck sold off all their Moderna shares. They had invested in the company. They sold off all their shares. Is that odd that they sold their shares? Right? They're supposed to be partners. They sold a bunch of shares. Should we be worried about that? Also, the CEO of Pfizer sold off his personal shares. 60%, 60 or so percent of his personal shares in Moderna. Why? Why do you ask? These guys are no dummies, man. These guys are no dummies here. Why would they do that? Huh? Tell me. When a stock goes from 80 to 180, you take some profits. That's basically all that happened here. Nobody's saying this company's bad or not going to make any money. It was just overvalued. So there's your lesson of the day from those that run Merck, as well as the CEO of Pfizer, they saw a gain of $100 or wherever they ended up buying the shares. They took their money. They recognized that stock went too far too fast. All that volume that you see in there, that's those people selling their shares to all of you or whoever chased this stock higher. When a stock gets extended from its 20-period moving average, it will always pull back to it. So be very careful there. If you don't sell, know that there are others in the know that will be selling and taking some dough. So keep that in mind. Have a plan for that stuff. If you buy a stock and you're fortunate enough that it takes off, at what point will you say, thank you, and take some or all of your profit, right? Gotta do that, man. All right, let's see. Let the stream catch up. If I have any questions here. And then tomorrow, you got Carnival Cruise with their earnings, Cracker Barrel earnings, Kroger, Signet Jewelers, Cloudera, DocuSign, Marvell, and Ulta Beauty. Dividends coming out. BlackRock paying out $3.63 because they have to. Fizz paying out $3. Kimberly paying out $1.07. Pepsi $1.02. Some good ones there. Waste Management 55 cents. We'll see. Yeah, take some profits. You got it, man. I like it. The vaccine isn't the beginning of the end. It's the end of the beginning. Need a strong vaccine campaign to get it distributed. That is going to be the big question mark, right? Does the vaccine mark the mental end by consumers? Do they go out and feel better about spending money in things that they maybe hadn't spent money with? How does that all go? Do people actually get the vaccine? Thankfully, that's not my job to decide that because that's a tough one. You got to hand it to the people that aren't politicians, the actual scientists and the engineers that are making this happen. We got to hand it to them, and they get the hero award there. Yep. Oh, yeah. Oh, Harry's excited about the old Tesla edition there. They're going to do it all in one day and on a light volume day, one of the most light volume days and weeks, by the way, for the S&P throughout the year. That's going to be fascinating, Harry. I look forward to that. Yep. Oh, yeah. Does the extended apply to funds? Extended applies to anything in life, believe it or not. You can look at anything. When home prices get extended, what do? They pull back. We could say cars, but we don't really track that. When you have stock prices, mutual funds, because they're made up of stocks, ETFs made up of stocks. When they are individual stocks that are in a particular industry, like the marijuana, right? Those people, there we go, not getting this one monetized today. But, you know, things like that, anything in life that extend. Tickle Me Elmo. Who's a Tickle Me Elmo person, right? You remember, I was a kid, I didn't want one, but Tickle Me Elmo. Prices went ridiculous. What happened? Fall apart. You can probably buy 100 of them for $1 these days. Yep. Keith says, Dustin, do you do weekly versus monthly dollar cost averaging? Do weekly versus monthly dollar cost averaging, thanks to you, have a question in December. Would it be wise to advance the last 2 weeks forward before the Santa Claus rally hits? You'd be playing the odds there that you would be getting in before a rally. I don't blame you for that. I'm not saying there's going to be a rally, but statistically, if you're going to let the previous years and typical Santa Claus rally dictate your returns, I say it's worth a shot. Why not? Yep. And also, you're not talking about a lot of money, right? If you're just going to say, I've only got a few weeks left to go, I'm just going to front load that. If you're doing that throughout the week or throughout the year, it's really not a lot of money. I think it's worth a shot. Yep. Can we get a fin tips on days where the market is, when there's no closing beat? We actually broke our streak the other day. No, last week. Typically, we take a hit there. Yeah. Hey, Dustin, in the near future, will you manage HSA accounts? Wow, what a timely question. I would love to. We need a little help to get that put into the system and to be able to actually do that. I would love to. I was actually, before the show started, I was actually researching one of the guys that I had previously reached out to. It didn't work out before. I was trying to see if he still worked for them. I would love to, but is the short answer. And it's definitely on the front of my mind there. Yep. Oh, yeah. What should you watch for on light volume days or during light volume time periods? There's one simple rule. You never short a boring market, or you don't short a quiet market. That's how they say it. The momentum's to the upside. Anytime there's lighter volume. The Friday after Thanksgiving, positive 88% of the time, or 86% of the time, maybe now 87% of the time. because light volume. Whenever there's light volume, all you have is that real sort of index buying, the rebalancing, little window dressing maybe, not really so much window dressing, but you have that adjustments that are simply happening because of needing to make rebalance decisions or whatever. You have less speculation, so tends to lean to the upside there. Yep. Oh yeah. Yep, talking about a few $100 there. There you go. Yep. You lived through the dot-com collapse. I had fun with that myself. Yeah. I was younger, much younger, of course. We both were, but yep. Are we heading there with the huge run-up in the Nasdaq? No, actually no. So we look through just to show you the times that the Nasdaq actually does generate returns of 40, 50%. It's not technically odd, right? In the last 20 years, we had a handful of options where that's happened. So I don't think that. I wouldn't suggest that at all for having a 50% gain. It's how it does it too. Like this has been kind of steady. You're looking for that hockey puck or hockey stick kind of rally, like Moderna. Yeah. Well, that's a good question. The question is, you want to answer this one, Cody? Any thoughts on a McDonald's January 15, 220 call? Any thoughts on it? Is it a long call, I'm assuming, so you're buying the call. Otherwise, you probably would have said you sold it. So you're bullish. You want it to go to 220 by the middle of January or that Friday. You're well within range. I would not buy a new one here, right? The general rule for a long call position is you do not buy out of the money long calls. You buy at the money calls, no matter where you're at. If you're bullish, you buy an at the money call because you're only representing half of the of a stock position, right? You have a delta of essentially 0.5 or 50. So you don't want to buy a call that's at 220 for January. You always want to go in the money, pay up for it, and go. I'm sorry, at the money. So that's my general tip there. Could McDonald's get to 220 by January? Absolutely. That's not $10 is not bad at all. Yep. Oh yeah, I love it. Are we in Bitcoin? No, not in Bitcoin. We do watch it every now and then. It's on the screen, something we can definitely post. It is obviously very extended and has had a good run. People are excited about that 20,000 number. I saw the article out of the UK exchange that does crypto over there. I don't know what they call themselves. They said it's now officially too big to fail, which is weird because usually we're talking about dollar-denominated companies when we say that, so you wrap your head around that one a little bit. Yeah. Interesting. Okay, I've covered it all. I've done my job here today. I will thank you so much for watching. I hope you have a great rest of your day. Oh, there we go. We'll be back tomorrow to do this all over again. Check us out at jazzwealth.com. If you want to join the research site, you could do that as well. Lots of good things coming there. And we'll see you tomorrow.